I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. It is May 31st. It's Tuesday, last day of May, right after Memorial Day. Hope everyone had a great Memorial Day.
Yeah, it was an awesome weekend.
Yeah, it was
awesome weekend.
Great weekend. And we are doing the interest rate update as we do Monday through Friday. So we're going to get right into it. But before we do, this is
Monday through Friday, unless there's Memorial Day.
Yeah,
That's right.
This is for informational purposes only. Why, Tom?
Because we're smart, but we're not brain surgeons.
That's right. No financial advice here. And if you are new to the channel, be sure to subscribe, like, comment, and let's go right into the 30-year fix today. We see at 4.875. Last Friday, we saw them about 4.75, so they've come up a little bit. We see the 15-year fix at 4.125. Again, a little bit higher than last Friday.
The 5-year ARM, 4.49, same as last week. The 30-year FHA, 4.25, the same. And same with VA, 30-year, 4.25.
And here are the loan assumptions below. When you look at the conventional FHA and VA, basically this is the criteria that we plug in to get these rates. And quick note too, these rates come with no points, no extra fees.
Oh, we don't have our little no points thing on.
Yeah,
there.
I know. I forgot that on the slide there.
Okay, no points, no extra fees, no hidden baggage fees, whatever you want to call it. They're called a bunch of different things, but this is kind of what we call the at par pricing. Yeah. No extra points.
Okay, let's go to the zoom out to the 30-year fix, 1971. All that history, we see that in 1981 there was that peak right up here at 18.3%. That was the highest point that the 30-year fix reached.
We still need to find one of those people to interview him.
I know. If you
18%.
If you're watching this video and you were one of those folks that had something in that 16 to 18%, let us know.
Yeah,
comment.
Call us. Yeah, we'd actually love that.
And then in 1986, the interest rates started in this channel where they just ricocheted off the top and bottoms all the way until this March. So for 36 years, did I do the math on that right?
Yeah, no, I think you're correct. Yeah.
Okay, and then in March 2022, they busted out of this channel. We believe that interest rates will go back down because what caused this downward pressure really is the continual printing of money, the constant legislation to add more debt, national debt. Interest rates have gone down. We do believe that they will go back down again.
And primarily because of this pandemic that we're coming out of. When you look back the past 36 years, we've had nothing else like that. We have had, economic factors for sure and disruptions, but nothing like this pandemic.
That's right. Okay, so I think this is going to be good for everyone to see. We are in Maricopa County in Arizona. Huge. There's like a little over 4 million people in the county. The median home price is about $490,000. It's very, so a lot of you out there in the country are probably seeing numbers like that too, but $490,000, if you're going to buy a house for $490,000 and you're going to put 3% down, 5, 10, 15, 20, 25, or 30, this gives you a good ballpark. All right. These are just estimates for taxes and insurance. You can see some mortgage insurance in there until you get to 20% down. There's a little HOA payment in there. This shows you what your payments would be like. Again, just a ballpark. Your estimated closing costs, estimated prepaid taxes and insurance. This is your total cash to close line. And then you'll see this little MI factor. All right. So what I'm also going to show, this is...
Holy cow, look at this chart.
Tom and I were just talking about this right before we started recording. And this is what we call an eye chart. It's like there's a lot going on, but I really want to simplify this. If you were listening, on that previous slide, the median home price is $490,000 in those examples. If inflation is 7%, that means the home is, if the home is going to inflate or appreciate, really the same thing, 7%, that $490,000 home, that means it's going to appreciate $2,858 a month. Okay. And then these blue columns are the payments. Okay. The 3% down, that's this $2,978. This $2,877, that is this 5% down. That's what your total payment would be like if you put 5% down. But look, inflation.
So are you telling me that the house is going to inflate by the exact amount of the principal, interest, taxes, insurance number if you were to assume a 5% down.
Yes, it's just about
That.
It's
Yeah,
really close.
That's incredible. And hopefully this chart is not too confusing for people. Even when I was looking at it, when we were preparing for this podcast, there's a lot going on here. I recommend focusing on that 20% down or less. There are plenty of you that have, additional funds, but your brain starts to like turn into scrambled eggs.
Yeah.
But just look at that. The point is inflation is such a big thing. Appreciation is such a big thing that it is equating to a 5% down mortgage payment.
That's right. If you're not buying a house and homes appreciate at 7% a year going forward.
Yep.
And if you follow this channel, so again, subscribe and like the channel, you'll be able to actually see us. We do go into reasons why we believe that the market's going to stay at least strong, or probably won't,
Right. I don't think that we're saying things are going to continue to, to increase the way that they were, but we think that they're going to stabilize eventually.
Yeah.
They're probably going to go up a little bit more before they stabilize. But even when they stabilize, we're not seeing declines out there. Nobody wants that, in this market. And if someone is telling you, oh, they're going to decline, I think they're just saying that because that's kind of the easy thing to say. What goes up must come down. Not necessarily. There's lots of charts that we could show you that will say different economies do different things in different types of situations. And real estate may not go down. But
Yeah,
we haven't seen that for a while.
Yeah, we would need a ton of inventory to come on the market.
Yeah.
An absolute ton of inventory to come on the market. And yeah, there's probably a little bit increase of inventory coming up in the last 2 months. But there's a lot of people staying in their home, not selling their house because they have very low interest rates that have been locked in for the last 2 years.
Right. And be very careful, too, just thinking it's going to come down. Oh, it's going to come down. Let's just wait. Life needs to happen. That's why we say, it's not timing the home, but it's time in the home because you really can't afford to sit there and wait. I always say wait for the investment. If you're out there buying investment properties, even though I know a lot of investors that are still buying, you can wait more on the investment side. But on the primary home side, you have to live.
Yeah.
Babies wake up and cry whenever they want.
And you have to pay someone's mortgage.
You got to pay someone's mortgage, so you might as well pay your own mortgage. So, for whatever reasons you have people wanting to go in on a mortgage with you, or you just got married, you got a new job, or you're moving, you need to take control of your destiny and control your home. Buy the home.
All right, everybody, be sure to subscribe and like and comment. We'll be back tomorrow.
All right, folks. Thanks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com, and be sure to take a look at all of our other videos on our channel.